Hello and welcome to Gradient's weekly roundup of key business and financial developments in Sri Lanka for the week ending 8 September 2022. I'm Nishani Pigera and here are the top stories for this week. US, China and Paris Club extend support for Sri Lanka's debt restructuring. IMF debt targets can be met without domestic debt reforms, says central bank governor. World Food Programme warns of rising hunger. August tourist numbers drop due to travel advisories. We will also briefly look at other notable news that made it across to our news desk and wrap up with a capital markets update. In our main story this week, in a significant development, China, the United States and the Paris Club extended their support towards Sri Lanka's debt restructuring. Zhao Lijian, China's foreign ministry spokesperson, said that China supports relevant financial institutions in consulting with Sri Lanka for proper solutions. While in a letter seen by Reuters, Janet Yellen, US Secretary, stated that the United States will support debt restructuring and extend financing assurances. Dr. Nandalal Veerasinghe, governor of the central bank, believes that Sri Lanka is able to meet IMF's debt targets without restructuring domestic debt. Speaking at a meeting with members of parliament, he said that since the debt default in April, the relative value of domestic debt has reduced by 10%, while external debt has increased by 10%. He commented that high inflation has eroded the real value of treasury bills and bonds, effectively restructuring them. The governor further added that Sri Lanka will not be able to access capital markets for the next 4 years, despite rating upgrades until the IMF program is complete. The World Food Programme revealed that hunger levels are rising sharply as 4 out of 5 households in Sri Lanka are limiting portion sizes and skipping meals to cope with the ongoing economic crisis. According to WFP Regional Director for Asia and Pacific John Alif, millions of the poorest Sri Lankans can no longer afford an adequate diet, and we fear the situation may get worse in the weeks to come. To support the most vulnerable, WFP is to provide monthly direct cash transfers worth 10,000 rupees to about 60,000 families. According to the SLTDA, tourist arrivals in August dropped 20% from July to 37,760, mainly due to several European travel advisories. Arrivals in the first 8 months of the year amounted to 496,430, with India being the largest source market. Meanwhile, this week, Belgium, Canada and New Zealand relaxed travel restrictions to Sri Lanka, following the UK, France, Switzerland, Netherlands and Norway. In other news, on Monday, the price of Litro gas was reduced. The price of a 12.5 kilo cylinder was adjusted by 113 rupees, whilst the 5 kilo and 2.3 kilo canisters were reduced by 45 and 21 rupees respectively. Also from Monday, mobile and broadband charges were increased by 20% and pay TV rentals by 25%. Sri Lanka's trade deficit in July was $123 million against a 21 million surplus from a month earlier. However, this is a significant improvement from the deficit of $606 million recorded in July last year. Imports fell to $1.3 billion, down 25% from last year, whilst exports rose to $1.2 billion, up 5%. And now let's take a look at the weekly movement of the All Share Price Index and the S&P SL20 Index at the Colombo Stock Exchange. At the Treasury bill auction held on Wednesday, yields on all-term maturities were unchanged. Of the 106 billion rupees worth of bids, only 10 billion rupees were accepted. And here's how the rupee performed against the dollar this week. In other market news, significant purchases from SG Holdings of Expo Lanka helped the Colombo Stock Exchange record 4 billion rupees in net foreign inflows for the year. And that's a wrap for this week. Follow us on LinkedIn and YouTube for more updates on business and financial developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.